Hey guys, what's going on? It's Andy here. Welcome back to the Andy Kandola Show. So in today's video, we got a lot to cover. I want to share with you guys the 5 different types of investing options and why I decided to go with the income dividend investing strategy. Now, there's many different options out there, so I'll go ahead and get into that in this video, as well as I want to go ahead and share with you guys an update on my portfolio so you guys know where my current portfolio is sitting at. Now, if you are new to my channel, my goal with this channel is to share with you guys and be fully transparent as far as where my portfolio is currently sitting at, share with you guys my strategy as well as all my trades in my portfolio. Now, my portfolio is up for the week. It is up $121 and it's currently sitting at $37,467. Now, in regards to the last week, my portfolio is up $84.56 or 0.23%. In the last month, the portfolio is up about 5.55% or $1,702. In the last quarter, the portfolio is up $2,141 or 10.97%. And overall, if we look at the all-time on this portfolio, it's basically the same thing here. I'm up $2,141. Now, the other nice thing with this portfolio is that this portfolio is primarily focused on dividend investing. Basically, I'm earning dividends in this portfolio, and year to date, I've actually earned $168 in dividends. This portfolio is quite new. I've started it in the last quarter, so the goal is just to keep on building this dividend income and to go ahead and reinvest this just to grow the overall value of the portfolio. Now, if you do want to see my full portfolio and basically all my stocks in this portfolio, I have them broken up into the 11 different sectors, and I do have a link in my description that I basically have all my different stocks in. So if you do want to check out each individual stock, you can go ahead and check that out, but I'm not going to run into that in this video. Now, additionally, I do want to share with you guys my current trades that I'm currently making in this portfolio as of today, and I do have a total of 20 buys in this portfolio, and these are basically going to be all my different buys that I'm buying in this portfolio today. It's going to be Aflac, Realty Income Corporation, AT&T, M&T Bank, JP Morgan Chase, PepsiCo, Duke Energy, T. Rowe Price, Bank of America, NextEra Energy, Union Pacific Corporation, The Southern Company, Coca-Cola, Waste Management, SJW Group, Hormel Foods, Moody Corporation, Ecolab, Altria Group, and Costco. So these are going to be all the trades that I'm currently making in my portfolio, and as you can tell, all these stocks do pay out a dividend. Some are a bit safer dividend stocks, some are dividend aristocrats, some are dividend kings, but in general, all these stocks are dividend-based stocks. So that is the goal of this portfolio. Now, I am planning on starting a new series on my channel as well. If you do want me to go ahead and review your portfolio, go ahead and send it to me. My email is down in the description, along with a quick description of what your goal is in your portfolio. But now, the other thing I wanted to share with you guys is the current dividends that I'm getting in this portfolio. And at this point, the nice thing is I'm basically starting to see dividends on a daily basis. Now, since my last video, some of the dividends that I did get in this portfolio is from Dominion Energy, which is one of the largest energy companies out there in electric and gas utilities, Waste Management for $1.61, Home Depot for $5.90, Lind for 69 cents, Duke Energy for $2.51. And some of the other ones I believe I already brought up in my last video, but Realty Income is basically one of my largest dividend-based stocks. But now I want to go ahead and share with you guys the 5 different types of investing options there are, and basically the reason why I decided to go with dividend investing. Now, I'm going to run through each one of these 5 different investing options, and then I'll go ahead and give you guys my take as far as the benefits of each one of these investing options and why I just decided to go with dividend investing. And now, just jumping into the first type of investing option is going to be value investing. Now, with value investing, this is a very popular way to invest, and this is basically Warren Buffett's strategy. The goal with this investing is long term. So basically what you want to do is you want to buy a stock based on its fundamental analysis, meaning that you're not looking at the actual market value of that particular stock. That weighs in a lot less. The more important factor is looking at the overall price to earnings ratio, looking at the company's profits, looking at the company's balance sheets, making sure that the assets of the company can cover the liabilities. And in general, based on all those different fundamentals, you're looking to invest in a company that's undervalued and that's basically underperforming, but their future potential is really high. So the goal is to buy low and eventually sell high. Now, this is, of course, a long-term strategy. So the goal with this type of strategy is going to be to hold the company for at least 5 to 10 years, if not longer. So like I said, this is a very popular strategy, and this is Warren Buffett's strategy overall that he focuses on. And going into the number 2 strategy for investing is gonna be growth investing. Now, the nice thing with growth investing is that with growth investing, you're basically not looking to build any income, but you're looking to grow that overall stock and basically expect a higher return. So with this strategy, the goal is to go ahead and invest in companies that are more than likely in the tech sector, those type of companies that are really looking to grow and that are basically reinvesting all their profits right back into the company. Now, usually these stocks are never discounted. They're usually never underperforming, and these stocks are usually priced in at least the next 3 to 5 years as far as their market value goes for that particular stock, because with a growth type of company, people are looking down the road and they're usually looking 3 to 5 years down the road. Now, a good example of this would be like a company like an Amazon or a company like Apple or maybe even a Tesla at this point. Now, additionally, with these companies, they're usually much higher risk, but you do get a much bigger return. But now, jumping into the third one here, guys, the third one is going to be active investing. Now, with active investing, you're basically looking at day trading in the market, meaning that you're actively investing on a day-to-day basis and you're following different indicators, candlesticks, different charts. You're doing different analysis, but they're all focused on technical basis. Now, with this strategy, there's not that much fundamentals that goes into it, so you're not really digging deep into the company's profits, into the company's earnings, looking at their balance sheets, and you really are not trying to understand that company too much into depth, where you're looking more at the indicators. Now, with this strategy, this comes with a lot higher risk. This is probably one of the most riskiest ways to invest in the stock market. And I can tell you guys, with this strategy, yes, you can certainly make a lot of money if you know what you're doing, but it's extremely hard to get good at this strategy. But in general, this strategy works extremely well when the market is very volatile. I can certainly tell you guys, just based on my experience, the risk with this is when you're trying to follow an active investment strategy, try to go ahead and paper trade with that first. What I would personally recommend, if you're going to be an active trader, paper trade for at least 6 months and figure out if that technical analysis and based on the indicators that you're looking at actually work before you go ahead and start investing your own money with this. Now, as a young investor, this strategy seems to always be the most attractive to young investors, but just in my experience, I used to day trade, and I can tell you guys, yes, I definitely made a decent amount of money day trading. I mean, there's a day when I actually made $40,000 day trading, but long term, I've actually lost more than that. So this is definitely a bit more of a gamble when it comes down to an active investment strategy. So my words of wisdom with this strategy is just to understand what you're getting into and definitely paper trade before you go ahead and start investing your own money in this type of strategy. But now let's go ahead and jump into the fourth type of investing. And the fourth type of investing option is going to be passive investing. Now, passive investing is a long-term type of investing where you're basically focusing on retirement money. Basically, you're not looking to take out this money until the age of 59 and a half at least. Now, with passive investing, you're just leaving your money in a well-diversified type of fund. Now, the different type of funds that are out there are electronically traded funds or mutual funds. Now, the difference between an electronic traded fund as opposed to a mutual fund is that a mutual fund is actively being managed as opposed to an electronically traded fund where it's just following a sector in the market. So as an example, there's a lot of funds with Vanguard that are basically following the trends in the market, and a popular one would be like an S&P 500 fund that's basically following the market. And in general, with these funds, they're really well diversified and they're a lot less risk. Now, this is 100% a long-term strategy, and you are basically just leaving your money in there and you're not expecting to touch your money. Now, with this type of investing, the average returns in this are right around 7%, and basically because these funds are just tracking an index, they are expected to be the safest way to invest in the stock market. Now, if I just go to my portfolio, I do have a Roth IRA that I've set up, and my Roth IRA is pretty well diversified, but it's broken up into many different ETFs. So I do have growth ETFs in my Roth IRA, and I do have dividend ETFs as well. Now, I do have a link for this in the description as well. If you guys want to check it out, you can go ahead and have a look at the different funds that I have. But just to show you guys one or two funds here, these are all the different Vanguard funds that I have in my Roth IRA. And basically within each one of these funds, they're invested in many different stocks, they're invested in bonds, so they're extremely well diversified. But now let's go ahead and jump into the fifth one. And the fifth one that I personally use, and this is the strategy that I like to use, is dividend investing. Now, dividend investing is basically one of the best ways to go ahead and build passive income. This strategy is focused on investing in dividend-based stocks. Basically, all these stocks would pay out a dividend. So you're more focused on that income and how much income these stocks are bringing in, as opposed to the growth of those stocks or as opposed to the actual value of those stocks. Now, here's the thing with this investment strategy. I personally really like this because I just don't like the volatility in the market. And in this strategy, whether the price of the market goes up or down, it doesn't really matter to me at the end of the day, because what I'm basically looking at is how much income are these stocks building for me. Now, the nice thing with this strategy is I like to dollar cost average into this strategy, and what that basically means is on every given week I'm investing a certain amount in the market, whether the market goes up or the market goes down. Now, if the market goes up, great, I'm building more and more dividends. But if the market goes down, I can tend to go ahead and just put more money into the market on that week and go ahead and buy some of these stocks at a lower price. So ultimately, they'll go ahead and start paying me more dividends down the road. And in general, with this strategy, because I'm taking that money that I'm getting in dividends from these stocks and I'm reinvesting it right back into the stock market, the power of compound interest jumps in as well, where the additional money that I'm investing from getting those dividends, once I go ahead and invest that money, I'm able to increase my portfolio, because with compound interest, that money's just compounding a lot quicker over time. So I do personally really like this strategy, because at the end of the day, I can get some sleep at night and I just don't have to worry about being able to time the market perfectly. Every time I've invested in the past with active investing or using one of the other investing strategies, I tend to always think in the back of my head that, hey, I could have timed the market better, or I just don't know how much to invest in the market, where I'm investing maybe 1/5 of what I wanted to invest. I'm waiting for the market to go down, but the price of that stock or the market tends to keep going up, and then at that point I just feel like I lost out in that. So with this strategy, it's definitely more passive, where you don't have to look at the actual market on a day-to-day basis, but you're looking at the overall dividends and you're more focused around that actual income. Plus, the nice thing with this strategy is all these stocks tend to go up over time. With even dividend-based stocks, there's dividend growth stocks out there, like an Apple, like a Microsoft, like a Nvidia. A lot of these companies do pay out a dividend, but they also have a growth potential as well. So in general, this is definitely my favorite strategy out of all the strategy, and this is basically what my full portfolio is built upon. And I don't want to forget to mention, if this is a strategy that you're personally considering, the best way to get started with this strategy is to look at dividend aristocrat stocks and dividend kings. Basically, dividend aristocrats are stocks that have been paying out a dividend and have been growing their dividends for the last 25 years. And dividend kings are stocks that have been growing their dividends for the last 50 years and that have been paying out dividends for the last 50 years. So that's one way to go ahead and start looking at investing in dividend stocks that tend to be a bit safer when you're looking at this strategy. Now guys, that's basically the way I like to invest in the stock market, because it keeps me disciplined, and at the end of the day, the market is extremely volatile at this point, and I don't see the volatility reducing anytime soon. So hopefully you guys enjoyed this video. If you are interested in M1 Finance, that's basically the platform that I use. I do have a couple links in the description. With M1 Finance, you can get a free $10 if you want to sign up for that. It is an affiliate link, so it does help me out a little as well. Additionally, if you're looking at active investing, or you want to go ahead and day trade or paper trade in the market, I do have a couple links for that in the description as well, as far as Robinhood or like a Webull that offers paper trading. But thank you again, fam, for watching this video. Hopefully you guys enjoyed this video. If you are new to the channel, make sure to hit that subscribe button to keep up with my portfolio and all the latest stuff in the market. But that's gonna be a wrap. I will see you guys at the next one.